Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the DowJones30 future charts on this very first trading session of the new trading week. Let's get started here with the S&P 500. We are seeing some significant movements in the market today, and this was expected. 4,200 here for the S&P 500 was seen as the ultimate floor. If this was to be broken, then that would be very concerning for the markets and would likely send the S&P 500 down towards roughly 4,000. Many people have highlighted over the past couple of days that we have clearly broken below the 200-day EMA and SMA, but upon doing hours and hours of research, I found that it's not really that relevant in terms of support and resistance when focusing on the EMA lines. I kind of see it more as a target. For example, if we've been rejected at the 50-day EMA, then the 200-day EMA could be the new target. I don't ever really look at the EMA lines for support. Obviously, sometimes we do find support at these lines, but if you track back a trading strategy where you buy on support lines, for example. So if you buy at the 200-day EMA when it makes contact with it, then I think it actually results to be a losing strategy. So I wouldn't focus too much on the EMA lines, in terms of support, but I would see if I would focus on it more as a target. So if for example, we're now back above or trading at the 200-day SMA, and now I would look for the 200-day EMA to become the next target. Whether we break above that or not, I'm not entirely sure. But if we did, then I would then look at the 50-day EMA, if that makes sense. I just wanted to clarify that with regards to the break in the SMA and EMA lines. But we're clearly trading within this. Some say it's a bullish flag, some say it's a wedge pattern, but there's clear areas of resistance here where we've created a series of lower highs, and this needs to be broken. And I think it is possible that we could see a break of this series of lower highs by year end, and I think that could potentially lead up to a very strong Q4 performance here for the S&P 500. But what's very interesting is that we're now trading back above last Friday's swing lows. So of course we closed out Friday right at the lows of a session. It looked like a horrible close. You never really want to see that, but the market has actually reacted very positively today. That close being around 4,220. We're now trading all the way up at 4,240, give or take 3 points. So if we can close like this in a few hours time, then that would be very encouraging going forward. And of course tomorrow we do hear from Microsoft and Google, so Alphabet's earnings, and we hear from several big tech names going into the next couple of weeks, the likes of Apple, Amazon, Facebook, etc. And I really want to see the big tech names bail out the S&P 500, bail out the Nasdaq100, and that, in my own humble opinion, will give the rest of the stock market a lot more confidence going forward. If we just move over to the Nasdaq100, very similar to the S&P 500, we continue to create these series of lower highs, and this has created this barrier of resistance. We do need to break above it if we are to go and achieve brand new year-to-date highs going into, let's say, the end of 2023. But again, we've found support at the lows that we previously saw at the beginning of October. We've bounced off those lows and we're trading above last Friday's swing lows, and that's very encouraging. So a close here would be very, very bullish for the market indeed going into the next couple of trading sessions. But again, it's all about big tech earnings, especially here for the Nasdaq 100, where the majority of the index is consolidated with regards to those 7 big stocks, that being Nvidia, Tesla, Apple, Facebook, Amazon, Google, you name it. So that's very important to monitor how those earnings calls go over the next couple of trading sessions. But again, today's performance is being very encouraging here for the Nasdaq 100. And then moving over to the DowJones30, where we have less of exposure to the Magnificent Seven. Very similar to the S&P 500 and the Nasdaq 100s, that we've created this barrier of resistance where we've had a series of lower highs. And but again, we found support at this area where we bottomed pretty much at the beginning of October. So we've gone to back test that. You could even argue and say it's a double bottom. And from here, I am looking for a positive reaction. The fact that we're trading back above last Friday's swing lows is very encouraging, but I want to see a little bit more here for the Dow Jones 30. I'd love to see this indice close in positive territory, and that would be very encouraging moving forward. But that's going to wrap it up here. I've actually opened up a few trades over in my Signal team. If you'd like to participate in my Signal team, then make sure you scan this QR code on your screen. It will take 5 seconds to get signed up. It's completely free for your first month. So you just scan away. That will take you to my website, where you can then join my Signal team, and that will also give you access to my daily market research, which I post before the US markets open to help navigate you guys through these very volatile markets. But as I mentioned, I've just opened a few trades in the S&P 500 and the Nasdaq100, which I do believe are going to yield great returns over the upcoming trading sessions. And all you got to do to join is scan that QR code on your screens. Thank you guys, and I'll see you all tomorrow.